All right, let's dive right in. If you're running a business, you know the deal. Cash is king. I mean, it's the absolute lifeblood that keeps everything moving. It pays your team, keeps the lights on, and most importantly, fuels your growth. But let's be honest, getting your hands on that cash can be one of the toughest challenges you'll face. So today, we're going to break down the entire world of business financing and give you the tools you really need to win.
First things first, let's just set the scene here. Every single business owner, whether you're running a cozy corner cafe or a tech startup that's taking off, you feel that pressure, that capital crunch. It's that feeling, right? You've got these huge plans, but your funds are limited. It's a totally universal challenge, and that's exactly where we're starting. So I have to ask, does this sound familiar? You spot this golden opportunity, maybe it's a chance to expand or buy up some inventory at a crazy discount, but one look at the bank account just says, nope, not right now. Or, maybe some unexpected expense just pops up out of nowhere and suddenly everything feels incredibly tight. If you're nodding your head right now, trust me, you are not alone. You're in the same boat as millions of other entrepreneurs out there.
And the scale of this problem, it is absolutely massive. I mean, get this. According to the U.S. Small Business Administration, a staggering 27% of businesses, that is more than 1 in every 4, say they just can't get the funding they need. It's so important to realize this isn't some kind of personal failure. It's a huge systemic challenge that even the most successful business owners have to deal with.
And the stakes here? Well, they could not be higher. A study from U.S. Bank found that a whopping 82% of business failures are because of poor cash flow management. 82%. What that tells us is that having a great product or service, well, it's just not enough. You have to master your cash flow. It is absolutely essential if you want to survive, let alone grow.
Okay, enough doom and gloom about the problem. Let's get into the solutions. Right now, we're going to start building out your financial toolkit. We'll break down some of the most powerful and really flexible financing options that are out there for business owners today. Think of these as your go-to tools for getting through that cash flow crunch.
So first up, we've got the working capital loan. The name pretty much says it all, right? It's a loan that's specifically designed to cover your day-to-day costs, things like payroll, buying inventory, or just paying rent. It's like a direct injection of cash to smooth out those bumps in the road and just keep your business running. And the best part? Most of them are unsecured, which is just a fancy way of saying you don't have to put up personal assets like your house as collateral.
Next up is the business line of credit. And the key word here, the most important word, is flexibility. See, unlike a regular loan that gives you a big lump sum all at once, this is more like a pre-approved pool of money. Let's say $100,000 that's just sitting there, ready for you when you need it. You can pull funds from it whenever you want, in whatever amount you need, up to your limit. And, this is crucial, you only pay interest on the money you actually use. It's basically your financial safety net, perfect for both emergencies and for jumping on opportunities.
So, what does this look like in the real world? Well, picture this. It's your busiest shift and your main piece of kitchen equipment just dies. A working capital loan or a quick draw on your line of credit means you can replace it immediately without losing a ton of sales. Or, how about this? The perfect retail space right next door suddenly opens up. Having access to capital means you can grab that growth opportunity before one of your competitors does.
Okay, so now you know what tools you might need, but where do you actually go to get them? This brings us to the next really critical decision. Picking your funding partner. There are basically 3 main paths you can go down, and trust me, each one has its own pretty distinct pros and cons. So let's break them down. This little table here breaks it all down, so let's walk through it. First up, you've got your traditional banks. The good part? Yeah, maybe lower interest rates. The bad? The approval process is incredibly slow. We're talking up to 6 weeks, and they almost always want collateral. Next, merchant cash advances, or MCAs. They're super fast, which is tempting, but, and this is a big but, their key drawback is a crazy high effective cost. You repay them with a percentage of your daily sales, which sounds okay, but it can be really unpredictable and can choke your cash flow when you're actually doing well. And finally, you've got alternative lenders. These guys often give you the best of both worlds, approvals in just days and no collateral needed. The main challenge here? You've got to do your homework to find a really trusted partner who has clear, transparent terms. All right, let's fast forward. You've done it. You secured your funding. Now here comes the really exciting part, putting that money to work. See, getting the cash is just step 1. Strategically investing it, well, that's what really separates the businesses that thrive from the ones that just, get by.
So where are you going to get the best bang for your buck? Well, here are some of the most impactful ways to invest. You could launch a new digital marketing campaign to bring in tons of new customers. Or maybe adopt technology like online ordering to open up brand new revenue streams. You could invest in quality by upgrading your equipment or renovating your space. You can even invest in your team to cut down on costly turnover. And of course, there's always the ultimate growth move, using that capital to expand and open a whole new location.
This really gets at the modern formula for growth. It's not just about your physical space anymore. I mean, a beautiful storefront is awesome, but a super smooth online ordering system, that's just as crucial today. Smart growth means investing in both your brick and mortar appeal and your digital footprint, so you can meet your customers wherever they are.
So we've covered the what, the where, and the how. To wrap all this up, let's boil it all down into a simple, actionable checklist. Think of this as your go-to guide for making the smartest possible choice when you're picking a lending partner.
Here are the things that should be totally non-negotiable. First, you need a quick and easy approval process because opportunities won't wait around for you. Second, no collateral required. That protects your personal assets. Third, look for a locked-in interest rate. That means your payments will be predictable and won't suddenly shoot up. Fourth, and this one is so important, you absolutely have to demand transparent terms with zero hidden fees. Also, look for that flexibility to draw funds as you need them. And finally, always partner with a lender that has a proven, positive track record.
So, we'll end on this thought right here. Being prepared is what makes all the difference. Having the right financial tools doesn't just solve today's problems, it unlocks tomorrow's opportunities. So the real question isn't just, do I need cash right now? But a much bigger one, is my business actually prepared for its next big opportunity? Thanks so much for joining me.